going on, people? Luke here from LAGFX. We are back today with a new case study video. If you guys are new to this series, it's basically where we choose a pair that we are wanting to complete a full top-down analysis on, and we break down our short-term bias as well as our long-term bias. Now, this style of video is great for those who are wanting an in-depth look into the certain pair that we are looking at, as it gives you guys the ability to prepare for future price movements as well as current price movements. With this information, it allows you to place shorter term positions as well as those longer term positions. Now, throughout my top-down analysis, I will obviously explain how I implement my strategy and how I look to analyze the markets. So that helps you guys get a better understanding on how I look to tackle these markets on a day-to-day basis. So the market we're going to go over today is the NAS100. Now, this is a pair that I do tend to trade often, although it's not a pair that I have traded as of recently. But upon a request, I've decided to make this video today to give you guys a good understanding on what I am seeing in this market and how we can look to take advantage of some of the moves it's putting in. So if you guys do go on to enjoy this video, don't forget to leave it a thumbs up. And if you have any questions or queries with regards to the analysis I go through today, as always, leave them in the comments below. With all that being said, people, let's jump straight into today's case study video. So as you all know, the first thing I like to do when I complete a top-down analysis is to start as high as the monthly timeframes. This gives us an overall bias on the market and it helps us understand the overall direction. So as you can see, quite evidently, this is a bullish market, one that's extremely bullish. And that's because the US dollar is in fact the strongest currency out there. If you don't know, obviously all currencies used to be backed on gold, going back to the gold standard. However, currencies are now backed by the US dollar, hence why we see such strength in this currency. So as you can imagine, some of the biggest businesses in the US are probably the most wealthiest around the world, which is why we see such hawkish behaviors in this market here. So now that we have our bias and the direction of the market, it gives us a better understanding on the direction we want to take and the types of positions we want to be placing. So I am looking to buy into this market with the understanding that this market is going to continue to appreciate over time. So now that we have that understanding, what I want to do is I want to go down to the weekly timeframes and I want to look more closely at the structural laws that this market is putting in. So you can see here that this low represents the weekly low. So a break in this low would basically suggest a complete reversal in this market. And it would suggest that this market is going to now trade us in a bearish way longer term. So this is a significant low. So this is a low just to keep an eye on. Then we have a look at the more fractal lows. So these are the lows that are usually set on the daily time frames. We go to the daily, they are a bit more significant. So you can see here the last low that I would consider a daily low would be this one here, like a significant daily low. If this low here was to break, then it would suggest that price could come as low as this point here before trading us higher. Okay, so it's important just to have these points in mind. What I'm going to do is get rid of this one. We'll keep this one up for now, just because we want to zoom in closer to the current structure of this market. Now, with us wanting to buy into this market, we need to look for areas of demand, areas at which price may pull down and into before trading higher. Okay, so we need to look for areas of demand, fair value gaps, order blocks, things of that nature. So straight away, starting from the bottom and working our way up, I can see an area here. This right here represents a hidden order block on the daily timeframes. We also have a zone here. This is a valid order block that's actually visible here on the daily timeframes. And then we have another order block here. Again, very valid, could be an area at which price pulls down to before trading us higher. Now, all we would do, and essentially, is wait for price to trade down and into an area of interest, reject well to the upside, breaking structure fractally like this, pulling back to set a higher low before trading us higher. We would get involved in the higher low that is created after the break of structure that follows from the penetration of the zone. And that's when we get involved in the market. So this is like a mock-up on how a trade may look here on the NAS100. So I'm just going to get rid of that again for now. Because what we need to do is we need to go down to the 4 and 1 hours just to see how price is playing out at the moment. But these are significant areas at which I feel price may pull back down and into to set a new higher low before going on to set a new higher high. So structure may look something like this, just as an example. You can see we have clear bullish structure. We can add the previous highs and lows. As you can see, we have a low set, a higher low, and another higher low. We have a high set, higher high, and a new higher high that would be set in the market. So we are following the laws of bullish structure, which, as we understand, is the overall bias of the market. So we are trading with the majority traders. But what I want to do is I want to go down to the 1 and 4 hours now, and I just want to get a good understanding on the fractal nature of this market, just to see how price is playing out. You can see here that we are starting to break what would be considered a protected low. This tells us that there is weakness in the market, and it's suggesting that price may be ready to put in some kind of reversal or corrective wave to trade us lower before taking us higher. So this here is a break of structure, and the reason for this is because this low here that was set in the market has been broken to create a new lower low. This is the last protected low because this low here created the highest high, okay? This low created the highest high. So a break in that tells us that price is weakening and that supply is being introduced, demand is being offloaded. So with that understanding, what we now want to see is a continuation in bearish structure. And the reason for this is because it validates and confirms that price is in fact putting in a corrective wave. So what we could then do is we could look to short this market. So we could sell into this market before we trade it long once price reverses to the upside. So what I'm going to do is I'm going to mark out an area of supply, this here being an area of supply, and you can see price trades up and into this perfectly before setting that lower low. We go down to the lower time frames again. We need to find more areas of significance in order to confirm that price is respecting these areas of supply. I'm going to mark out this area here. As you can see, it is a hidden order block that represents a supply zone. Price traded up and into this before trading goes lower. So price is respecting these areas of supply. This here represents a hidden order block. We go down to the 15 minutes. It gives us a clear order block, this green candle, which is brilliant. Price is about to trade up and into this, which could give us the opportunity to go short in this market. Now, by price trading up and into this area, okay, and rejecting to the downside, it tells us that more supply is being introduced into the market, more demand is being offloaded. So any buy positions that were executed here are being closed, okay? So demand is being removed from the market, and all the supply that's sat here waiting is being executed and entered into the market, which encourages price to trade lower. So if price does reject nicely to the downside after penetrating this zone, we want to see some kind of fractal break of structure. So that would be on the 1 and 5 minutes. So essentially we would want to see price trade into this like so, break structure to the downside, pull back up to set a lower high, and then continue trading us lower. We would look to get involved at this point here. It gives us a very refined entry and the ability to profit tenfold from any potential shorts. What this also indicates, okay, is a break and retest. We have broken this area of support, which is now acting as resistance, and we are essentially getting involved in a break and retest. Price has broken down, breaking this area of support, which is now acting as resistance. Price pulls back up to test that area before trading lower, which just builds confluence and confirmation when we are looking to enter in on these markets. So not only is it a break and retest, not only is price trading into an area of supply, but what it's also done is it's created a head and shoulders pattern, okay? Price has obviously traded lower. It's now setting a very small and refined shoulder, but it has created us with that third shoulder, which again is giving us more confluence. So it's following market patterns. It's reacting to a level of support, which is now acting as resistance. It's trading into an area of supply. It's giving us so many pieces of confluence to suggest that a trading setup here to go short could in fact be valid. So with all of that being said, what I'm going to do is set an alert for price to trade into this area. Once price trades into this area, I want to see good rejection to the downside. I want to see those fractal breaks of structure to the downside. Once we have that, I can look to get involved in this market in shorts. Now, when it comes to our take profit target, I am more than happy to set my take profit target just above this area of demand here. So somewhere around this point, as our take profit target is almost guaranteed and is very much achievable with us wanting to see price actually trade into this area of demand here. Once price trades into the area of demand, I'm expecting all short orders that have been introduced during this bearish leg to be removed from the market, and all of the demand that is waiting here to be introduced. That should give us that flip in the S&D balance and should encourage price to then go on to set its new higher high. So we are still following the laws of bullishness. We are just getting involved in the bearish corrective wave. That's my breakdown and run through on the NAS100. Been quite quick and quite brief, I understand, but I think I've gone through my top-down analysis, my thoughts for this market quite clearly. If you guys have any questions or queries, as I said at the start of the video, with regards to my analysis today, please leave a comment below. I'm more than happy to send a reply or create a video around anything you're unsure about. But ultimately, I am looking to trade this market short temporarily into this area of demand before trading price higher. So if you're looking to take part in the NASDAQ, look to go short, find your areas of supply to get involved from, set your take profit target at a valid area, manage your trades accordingly. Once price trades into this area of significance, look to close those short positions and prepare for the new impulsive wave to the upside. Now, on top of all of this technical analysis, the fundamentals also back it as well. We are seeing weakness across the board in the US dollar due to everything that's going on at the moment fundamentally. So this just further backs what we are looking at technically. Now, I just want to say a massive thank you for watching. If you have enjoyed this video and you've learned a thing or two, don't forget to leave it a thumbs up. And if you're looking to short this market with me, let me know in the comments below. Now, with all that being said, people, I wish you the best of luck during this festive period, and I'll catch you all in the next case study video.